Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, February 24th, 2023. It's 11:40 a.m. Eastern Times. I'm starting the video. Lots to cover, especially in the equity markets. But I also want to I won't spend a lot of time on that because I want to do an update on gold, silver, and the euro US dollar pair. That's just about to my target, so I'm added to my told you recently I started scaling back into GDX as a long position. And a couple updates on some of the commodities out there that stand out right now: coffee, wheat, natural gas. Those are the ones I want to get to. And of course, I want to cover the VIX as well. So let me write that down on my little notepad because I left that one out. Okay, here we go. So here's what's happening today. This is the clean board. Here's my busy board of SPY. On the busy board, I do have, let me just replicate that. Okay, it's also right here. This trend line is not fitted proper like I had on the busy board. This one is right here. If you zoom in, I have to come in. Here's the lows back there, the October lows. Then that series of lows right there around in December and January. Come in, capture those. And so what that gives us, if we turn off, well, I can't turn off, all the lines will go off, all the annotations. But you can see this candle right now, we're below there. So we'll play my glass half full, glass half empty game. In other words, bear check marks, bull check marks. So that's a breakdown of the primary trend line off the lows. And that is, bearish in itself, no doubt. We're clearly below that level. However, on the flip side, you can also see, I'm going to draw it out here. We are back testing at this very moment. This is actually the first back test of the primary bear market downtrend line. That's the bear market downtrend line that comes off the highs back here, right there. And so let me zoom back in. Let me squish this down a little bit, give us a little more real estate on the price chart. There it is. So back testing that, and just below that, this blue line here, that's the 200-day simple moving average, which often acts as support and resistance when you're above or below it. That was a perfect tag of both the trend line there and the 200 right there. And here you punch through it one day, close a little bit above it, but they couldn't hold. They failed it. They tried again one more time to punch through it and failed it. So it is a very important level. And again, it was taken out here, clearly taken out. And so I'll tell you, this is, again, it is not, despite the breakdown, it's not an all-in short signal, sell signal for swing and trend shorts. In fact, I'll bet you they're probably going to buy it up here. The algos will probably step in because this is the first full back test of that trend line. Again, the downtrend line there. And you still have, in close proximity, the 200 simple. So as I've been saying, there's just a confluence of support. The PPO itself is still in bullish territory above the zero line. Typically, the trend is bullish when the PPO, especially its signal line, the white line, is above, which it came above there, and it back tested here, and it remains above. So yeah, we could very well bounce here. It's an objective level for longs to step in or shorts to cover because of that. Now I can sit here all day and as I have and told you, we recently had these sell signals here on the trend line breaks, the uptrend line, and it played out for a good short trade as well. Is there more? Maybe. I just suspect not right away. And it is possible. I'm going to get to the VIX in 1 second. So stay flexible, stay open to any possibility, but like I said, if you look at it from that very, very simplistic point of view, like this, here I turned off all my annotations for you. You see a bear market downtrend line right there from the highs. You see a breakout and a back test. So anywho, that's that, and we'll see what happens from here. But I think it makes sense. I've reversed. I have some at this moment and just day trading some long positions because I think we're going to bounce here, and I'm going to show you something that could carry the bounce a little higher. And of course, I've showed you a lot recently. Everything that I've talked about: divergences, overbought conditions, PPO bearish crossovers, trendline breaks, the VIX breaking out of its bullish falling wedge. Let's not forget that. That's this purple line here. And so there's plenty to still support the case that we could go lower. And in the history of the bear market, both this one and previous ones, usually once the turn is in after a bear market rally, the downside can come pretty quick and swift. So I have to throw that out there, but like I said, I'm leaning towards them coming in and buying this up now. And at this point, I still can't rule out that as much as a marginal new high scenario. The lower we go, the more that's going to be of a rally if we get it. And of course, you have another trend line here, downtrend line that is likely to come into play and could cap any rally, assuming we even get one. All right, so that's it. And on SPY, let me just show you the other indexes and the futures. QQQ, that's my busy board. Here's my clean board. It's still getting a little busy. My most likely bounce target zone right here, right there, give or take, which we've hit and rallied up to the top of there. We're below it again, and it's resistance. There's price resistance around, really runs, it's more of a zone here around 296, 300. We're below that level, which is now resistance. It was support. But you can see we also traded through it for a little bit there. And what we did is we traded on, if I turn off all the annotations, we traded on the 200 simple, exponential moving average, that red line there. And now we're testing the simple. Roll back and you can see this blue line, the 200 simple, capped all advances in the bear market, or at least all advances to it, since it was first taken out here. You took out both, or the QQQ took out both the 200 simple and exponential there. And again, guys, they do very good jobs at defining bull and bear trends, and you go back many years and go back decades, especially on the tech heavy NASDAQ 100. And so you can see boom, 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 boom. Four rejections there, 3 right there at least. And we rallied up to it, took it out, back tested for a couple days, popped up, and now this is just a back test of it. So again, this is typically where buyers step in, whether they're natural buyers or machines, the algos. Wouldn't be surprised. And like I said, position for a little reflexive bounce here. When you take it down to the short-term charts, or let's go to the futures real quick. I don't see any great support on the 60-minute. I don't see any support really on the 60-minute chart other than a little reaction, previous reaction low right there. But what I do see, and you guys know me in these divergences, you can see the RSI and PPO down here. This is the PPO making equal or higher lows with prices making lower lows. That's positive divergence. And you need to, or at least I do, respect these divergent lows. You had a double tap divergent low right there, equal bottoms with the positive divergence there. That was a catalyst for this rally. Set up divergent high was a catalyst for this drop. And so now the thing is, in a downtrend, and as divergences form, sometimes they are burned through. If we keep going lower, much lower, you're going to take out these divergences. And I will say you don't have them on SPY and QQQ 60-minute charts, but you do have them on NQ, the futures, of course, NASDAQ 100 and ES. This is ES, and this is what it looks like here. So on ES, here's that primary trend line I pointed this morning. We're at it, and we had a little punch through. Remember, on the daily time frame, that's the most important thing, especially on the when you're trading off the daily charts. So one of two things: either this breakdown's a real deal and it's going to stick, or it was just a fake down, aka false breakdown, whipsaw. And that'll be the case if you start to rally up and clearly put this line back in the rearview mirror, because that will have likely cleared out some long stops and brought in some shorts. Little minor support right there where we hit at the lows today, 39.45. And there's your what I call potential positive divergence. I say potential because the PPO needs to turn up now and put in a lower high. It's still pointing lower at the moment, but if we can rally up here, and especially if we can recover this trend line, that's going to be pretty powerful stuff. It could set the stage and give us a fuel for a even bigger rally. We've had a couple pops, and we're able to gain some, micro trades off that level. But if we can recover it, and especially look for a break, if we do, above that 40-30 level right there, because that's what's really capped the trading, all trading in the last this week pretty much. And so that would probably propel us higher to any or all of these potential targets, maybe even the marginal new high scenario. We'll see. like I said, there's some a lot of check marks on the bearish case lately, and so we may never ever see that marginal new high. But like I said, it's certainly still in the realm of probabilities, as I like to speak of, not possibilities.